What's going on, guys? Simple Forex here, back for another video. Let's dive straight into this. Okay guys, so today we're doing some live trading, but firstly, let's go over and cover some of the important key components to my strategy. And not only that, I want to cover some stop loss key tips and components today, because having my stop loss where it was during this live trading session was so important to me, and you'll see why in just a minute. But I think a lot of people can improve their strategy or just trading in general by fixing their stop loss placement, because there are certain key zones that price likes to fall to, and if you know how to avoid these zones, you could actually save yourself a lot of money from those trades that come down, hit your stop loss, and then go straight up into your take profit. So if that happens to you, watch till the end, and I'm going to show you exactly how you can fix that. Let's get straight into the video. Okay guys, so the key three main components of my strategy. Now obviously, like, there's technical things that you have to know for the strategy too, but overall it seems like a common theme within my strategy happens to be one of the first things is momentum. Momentum is so important in trading. If you're trading against momentum, you're gonna have a harder time. You know, like if you had to push a giant heavy stone up a hill or down a hill, you're gonna obviously want to push it down a hill. It's gonna be a lot easier. You're gonna go with the way of momentum. You don't want to work against momentum. It's gonna be harder in the long run. If long term you're constantly going with momentum, you're going to be profitable long term. Now obviously short term you can trade against momentum and you're going to win, but overall if you're mostly always trading with the direction that price is already going, think about it, you're going to have a high probability of winning your trades. So momentum is so important, and we're going to go cover some of the key components of finding momentum. So one of the first things to do when finding momentum is whatever time frame you're using. Let's say it's the 1 minute. You want to look at multiple aspects. You know, obviously right here it looks like we're going down, but this is why it's important to look at momentum, because you know, if you check a higher time frame like the 4 minute, you can see, okay, we were going up. A lot of momentum was to the upside. Well, then you could say, it was down here. Then we jump to an even higher time frame. Okay, 15 minute. 15 minute looks pretty bullish to me. It looks like we're going up. Then we jump to the 1 hour. Okay, 1 hour. Oh, that's pretty dang bullish right there. We're going up. So now we have we have 1 time frame, 2 time frames, 3 time frames saying that momentum is in the bullish direction or in the upwards direction. And then lastly, the 1 minute, the time frame we're actually trading on, is in the down direction. How important is it that we're in a downtrend right now? Probably not that important. So it's probably not a good idea to trade to the downside if all the other time frames are in an uptrend already. You know, like I said, you don't want to push a stone up a hill, you rather push it down. And so far the hill is in the upwards direction, so you want to go with that. Now, like I said, it doesn't mean you can't trade to the downside. Obviously you can. You know, if you were able to catch this trade here, then good for you. That's 160 pips. But first of all, that's very hard to catch, and it's very hard to time that. Much easier to time trades going to the upside with momentum. So now, for example, you know, if we waited for price to come up and break above this lower high here, you know, maybe pull back a bit, boom, that could be a nice, you know, trade to the upside, because we already know everything's already going to the upside. So once we have that confirmation that price is ready to go back up, sure, go for a trade there. That is way more likely than price, you know, continuing down. And yes, in the short term price could continue down, but if you look back to the 15 minute, price will most likely continue higher still. A second key component of momentum is understanding structure. So everything that's being built has to be built on good structure. So if you're looking at an uptrend, you want to make sure the uptrend has a nice form, a nice structure to it. If it's all over the place, it's going to have bad structure, and it's most likely going to collapse. And that's actually an example of what might happen here. Something that I like to pay attention to when looking at momentum as well is, for example, like I said, if I was trading on the 1 minute here, I'm going to jump to the higher time frame like the 15 minute. Can I get a good look at structure here? So the importance of structure is always having price move up and a nice equal pullback. Price move up, a nice equal pullback. So let's say resistance. You know, price moving up, a nice equal pullback to resistance. Or to support, sorry. When we have this system, this is a good structure because we are building support every single time. You know, if price were to just crazily move straight up, it's going to be very imbalanced. It's going to cause a lot of people to sell. It's going to cause a lot of people to enter sells. And there's going to be nowhere for price to rest as support. So that's when we have the markets crash. In every market, you can see when price starts raising really high, a lot of people get greedy. A lot of people start using high leverage, things like that. A lot of people start FOMOing in or wanting to enter because they see prices shooting up. And then that can collapse very easily when it starts to move the opposite direction, because then a lot of people get their positions closed and whatnot. And then the market starts to crash the other way. And then everyone gets so scared. So everyone starts taking sells. And that's when you have a market collapse. So the same thing works, in everyday Forex. You want to make sure that price is creating these nice support systems. And that's what I say when we have these imbalances, for example, like this is a sign that price is going to eventually collapse into here, because there was all this movement straight up, but nothing to support in this area. So then when price finally does enter this area, so when price finally does enter into this imbalance zone here, we're going to have price collapse quite a bit because there's no support at all. So that's actually another key component to paying attention to momentum, because you want to make sure that if your bias is that the momentum is to the bullish side or the upside, you want to make sure that price is building a nice support system. So for example, if I was looking for a buy here, I'm not going to look for any sort of crazy buy having price go, way up here. I want to see that price, creates a nice support system first before taking a trade to the upside. Because when we have those big impulsive moves, I know eventually price is going to want to come down here and fill some of that before moving up. It's like people who climb big mountains. They're not just going to climb straight to the top. They always climb up a little bit, come down a little bit, build their camp, hang out for a few days, make some more progress, come down a little bit, set up camp again. So they need to adjust themselves to the altitude. And the same thing works in Forex. You can't just go straight up. You got to come down a little bit, chill, relax, build up some more momentum, make another push. So yeah, that's another key component. So those are some of the things that help with Forex. The main one obviously being that you pay attention to all the time frames to see which direction price is going. That's one of the most important things. Now, understanding the structure can be very important as well. But yeah, other than that, we're going to cover the second key component to the strategy. And I think it really comes down to patience. In this live trading session, you'll see patience is a very key thing. You don't want to enter necessarily straight away. You don't want to enter right away. You don't want to get too excited, get that fear of missing out. It's okay if you miss out a trade. Like yesterday, I was trying to do some trading and the charts wasn't really acting how I wanted it to, so I just stepped away. I literally sat there for like 1 to 2 hours staring at the charts, just having my finger ready on taking a buy, but I never did. And that's okay, because if I did take that buy, I probably would have lost because price ended up going down after that. But you have to be patient. You got to wait for the setups that you want. That's very important. And if that's something you can learn, quickly, good for you, but it takes a while to learn for most people. So don't get upset if you're impatient. It's gonna happen, especially if you're naturally impatient. It kind of sucks, but that's just more room for improvement anyways. Okay, and now lastly, like I said, stop loss. Stop loss is very important. So I'm going to show you guys exactly where the best spots are to place your stop loss. Now there's another important component before we get into stop loss, and that is having a good broker. Guys, if you don't have a broker yet that you're trading with, if you're new to trading and you're looking for a good broker, or you just want to switch up the broker that you have, go ahead and sign up with AAA-FX. I'm telling you, they are a great broker. Go do that now. Especially because right now they have a 30% deposit bonus. That's huge. Like for every $100 you put in, you're going to get an extra $30 bonus that you can put towards trading, and that's a losable bonus. So if you lose $30, that's $30 that's not even your own money. That's going to help you to trade better. Especially, if you're sticking to the 1% rule, that's 30 trades you can lose for free, basically. So I would go ahead and take advantage of that if I were you. It's going to help a lot, especially in your practicing phase. And if you're trying to get from demo trading over to live trading, this is perfect because this is money that you'll be comfortable with losing. Go ahead and sign up with AAA-FX down below. And with that being said, let's get into this next step here. Okay, guys, like I said, stop loss is so important. So I'm going to show you where key areas are to place your stop loss. So we're going to take, a trend like this, for example, and we're just going to replay. We know it's in the downwards direction, but that's okay. That's what we're doing here. We want to show you when price is trending in a direction, where are some good spots to set your stop loss. So we're going to let it play out a little bit and wait for price to actually make that trend that we saw was there. When you're on the 15-minute, and let's say this is your time frame that you're trading, you want to jump to a higher time frame, like the 1 hour. And jumping to a higher time frame can actually give you a better understanding of where to place your stop loss. So when placing stop losses, it's a good idea to look for where the wicks are on the higher time frame. We have a lot of wicks here, a lot of wicks here. So now jumping back to the 15-minute, as you can see when I play it out, you'll see price interact with these. See right here, price is interacting with these zones that we literally just marked out on the 1 hour. Boom, you see these first 2 wicks here. So this can give you a good idea of where to set your take profits and your stop losses. Mostly, if you're in this continuation style of trading, that gives you a good idea of where to set your stop loss. So for example, if you took a trade right here and you wanted to trade down to here, jump to the higher time frame, like the 1 hour. Check out, okay, where's the wicks? Okay, we have a major bunch of wicks right here. We have a major bunch of wicks right here. Now it's up to you. This obviously being, the first option, and then even more the safest option up here. Obviously, if you went with something in between like that, that's a good option right there. Even again, let's say you wanted to wait for price to pull back. Let's say even now, let's say I want to just take a trade now. We kind of got to see what this looks like a little bit, but we didn't see too much. We have wicks here. Okay, cool. Let's place our stop loss above these wicks. Now let's just go for something simple as a 1-to-1. Boom. And now we'll see price might come up and interact with this. You look at the 1 hour again. Yeah, that's where most of the wicks are, like in this area. So we might see, on the 15-minute, will price come up and interact with that? No, it didn't even come close. Okay, that's a good trade there. All right, let's say I want to take another sell. Let's go to the 1 hour. Let's look, where are the major wicks? If you want to go for something short term, and maybe you don't want to have a super big stop loss like this, that's a 200 pip stop loss. Maybe let's say you don't want that. Let's say you want to go for a smaller trade. Where is the nearest wick? We have a wick here. Okay, let's just go for something simple like that. Let's go for a nice little 1-to-1. I mean, we hit our take profit. Yeah, this is where the trend ended up reversing. So when price is trending, these are good spots to put it. Now this was the bottom of the trend, so obviously it's not going to work there. But yeah, that's just something that can help you. Now I know a lot of you have been waiting for the live trading, so let's get straight into the live trading. All right, it is 9:50 a.m. We're here on US 30. We're gonna do some trading right now. Yeah, let's make some money. Okay, so as per usual, I don't like to trade exactly at 9:30. I like to wait a little bit towards like 10 a.m. just until like, a lot of that major volatility dies down. Like this just shot up 80 pips in like half an hour. So we want to wait for a little bit of that to die down. But anyways, let's take a look at the higher time frame here like usual. Jump to the 1 hour, see what we have going on here. Like it's been for the past week, we've been in this uptrend. We tried to turn into a downtrend down here, but clearly we're pretty bullish still, so we kind of still continued up. A lot of that has to do with fundamentals as well. Got a lot of good news going on in the markets right now. That leaves us to jump to the 15-minute. Now here we are in the 15-minute. We want to look for breaks of highs or lows and just kind of tell which direction that price is currently in. Obviously we're in an uptrend right now, but have we broken any highs or low? There was low here, wasn't broken. A new low formed here, and it looked like we tried to break it right here and right here, but we could not successfully have a true break. It only peaked out and then went right back in. That's actually a really good sign that price could still be bullish, so we'll pay attention to that. But that's only on the 15-minute. So when we drop to, let's go 4-minute next and see what's going on here. Looks like we were in a downtrend and we broke this low here, formed into a downtrend. Now it looks like we're trying to form back into an uptrend. We had a true break here. We had this candle break out, and then we had this candle close above the breakout candle, as we can see here. So this is an uptrend now, and since we're already in an uptrend in all the other time frames, it looks like a buy here might be the play. So something we could wait for is wait for a little bit of pullback into this line, since we had a break. And it looks like, on the MACD, as you can see, this was the big push here. It looks like it's starting to form to the downside here on the MACD. So we could get a slight pullback here. As you can see, like we've lost all this momentum. We don't want to set our stop loss all the way down here. Be 100 pip stop loss. It's kind of unreasonable for especially how bullish price is right now. So we want to look for the next best spot. And this is a big, nice little chunk here of liquidity. It could be a good idea to set it 5 pips or so below that, ending up at 70 pips there. It's a little bit better, especially if we just want to trade to the past all-time high here. That's a nice easy 1.27 if we can get an entry where we have our entry so far. But like I said, it looks like Price is so bullish right now, so we're gonna have to wait this one out a little bit. Okay, so we did quite a bit of waiting here. I saw that price was pulling back quite a bit, so I held off, but it looks like price has kind of settled here at this lower support level here. So I might actually end up going for the trade now. Looks like it's at a pretty optimal spot to enter, so I think we're gonna go for a nice 1 to 2 here, or just about. It's about 77 pips here. So if we're risking $1,000 on this trade, I want to try to trade about $12 here. $12 per pip. Go with that. Yeah, that should be a nice 1 to 2 there. Okay, so we're gonna go ahead and take the trade here. Got ourselves just under $100,000 account here with AAA FX. That should be about $12 per pip. And yeah, for a buy. Beauty. Now we're just gonna go ahead, set our take profit and our stop loss. All right, this should be a nice easy trade here. We had quite a bit of price action telling us that price should continue in the upwards direction. We have all the other time frames going in the upwards direction, so we have a lot of momentum to the upside. The only thing we should be concerned about really is it looks like we had a big impulsive move here, so price tends to come back and fill these, but I think we should hit the all-time high at least one more time before coming back and filling in this gap here. So yeah, we're just gonna let this play out. And yeah. Hey guys, how's it going? It is now the next day. We ended up hitting our target of 161 pips. We chose a pretty good spot to put our take profit. Like I said, eventually I know prices going to want to come down and fill this gap here. It was a good thing to set our take profit just at the most recent high there. Any further would have been kind of a reach. So that was a good take profit there. And then our stop loss was in a pretty good area as well. It came actually really close to hitting our stop loss. We actually set our stop loss here because there was a bunch of liquidity here. And as you can see with these wicks, I knew that price would interact in this zone. So this for me was a good area to put our stop loss. And then if anything, I really should have put it below here, then it would have been obviously a smaller risk reward. And I was a little greedy on that side of things, but looking forward, or going forward, I should probably set my stop loss a little bit lower. We ended up getting $1,670 on that trade. That was our target. That's what we were looking to make anyway, so that was pretty good. Yeah, and it's Friday right now. I don't really like to trade too much on Friday, so I'm probably gonna go ahead and end the video right here. So yeah, hopefully you enjoyed watching, and hopefully you learned something from this trade. Thanks for watching.